Okay, hello and welcome to today's webinar about Splint Invest. Myself, Aurelio, co-founder and CEO, and Mario von Bergen, head of investments, will introduce today Splint Invest and the most important information. Let's directly jump into the very first and most important question. What are alternative investments? As you can see here on the screen, alternative investments is an overall category consisting of multiple subcategories. The general definition can be seen as everything which is not a traditional investment, so a stock, bonds, currencies. And in our world, we have distinguished four categories of alternative investments. One is luxury goods. That's the subcategory we are mainly active today, consisting of art, handbags, whiskey, wine, and watches, and more. There are more categories, for example, private equity, real estate, or infrastructure projects. Within the upcoming months, we are heavily working on enabling you to invest in more than just luxury goods. The next asset or subcategory we are going to release will be private equity. Then let's move on and answer the second question. Why do alternative investments belong in every portfolio? As an experienced investor, you are fully aware of the importance of risk diversification. It means that by investing into different categories, but also in different industries and currencies, you can diversify your portfolio and optimize the risk and return ratio. That's why you should also focus on alternative investment at a certain point and add things like luxury items or private equity to your portfolio. Why? Because overall, it lowers the portfolio risk without impacting the expected returns and generates a higher stability for your wealth. Now, why should you invest in wine, whiskey, watches, cars? Within the category of alternative investments, we have learned over the last several years that physical assets or so-called luxury goods show an above average performance and especially a very, very low volatility. Additionally, and that's the most important point from our side, physical assets, luxury goods, they do only correlate on a very low level with the performance and the growth of traditional markets or stock markets. So even if the performance is very stable, often very, very positive as well, physical assets protect you against inflation without exposing you to any unnecessary systematic risk. Now, let's quickly talk about Splint Invest. What is Splint Invest? We are a platform where you can easily and safely and transparently invest in today physical assets, fractions of physical assets like whiskey, watches, art, wine, and many more. We are a platform, which means that that we are not actively sourcing on our own the best watches, wines, and whiskeys, but we are collaborating with experts. The experts are always highlighted and displayed visibly within the app, so you always know where the assets are coming from. Our service mainly consists in auditing the partners or the experts and to make sure that only validated experts are allowed to collaborate with us and offer assets on our platform. Let me quickly provide you some additional facts about Splint Invest. We've started running our platform a couple of years ago. Now we have over 8,500 satisfied investors on our platform, which makes us very, very proud. We've sold over 98 investment opportunities as of today, which is the 21st of March 2023. For sure, in a very few days, we will reach 100 investments, which is a very important milestone. The assets are sourced from 14 different validated experts. On average, a user invests €550 per asset, and in total, over 3.5 million were already invested on Splint Invest. Now, let me quickly introduce you to the fee structure. which is of course very important for you in order to understand what you're actually paying for our services. And let me highlight that all the fees are transparently communicated and highlighted within the app. So you don't have to remember the fee structure by heart. Whenever you buy something within Splint Invest, you will clearly see what you're paying on fees. So important to mention is that there are no fees for opening an account, but this is free of charge. Also, like closing an account is free of charge, as well as getting the tax returns and the tax documents at year end is free of charge. But additionally, and this is very important for us, there are no ongoing costs for the invested capital. There is no asset under management fee or a similar fee. What we have are transaction fees. 4 to 10% is a so-called platform fee. 4 to 10% because it varies depending on the investment horizon of the individual asset. And then there is a 2% transaction or sales fee as well on the secondary market as at maturity when we sell the physical underlying. Now I will hand over to Mario, which is going to explain in more detail about the selection process of our experts.
Thanks a lot, Aurelio, and welcome from my side. So the question is, how does Splint Invest select its partners? So we only work with established and renowned partners who've been in business for years. So true experts, each and every subcategory of those type of investments which we offer require a lot of knowledge in order to source the right investments as well. And this is why we rely on really trusted experts as well in that regards. And to be admitted as a partner, Aurelio already mentioned it, it is kind of a multi-stage process where the experts need to go through. So this is where we as former auditors as well come into play. So the focus here is mainly on the legal structure of a company, on organizational aspects. So we really want to know where is an entity domiciled and which people are behind that organization. We want as well see some media presence so that we as well can read in the media about them being experts. We as well want to see the expertise of the direct contact person at the expert. And of course, as auditors, we're as well always interested in external audit reports. And only if we are happy and this audit kind of gives us the comfort that this is really a trusted partner, the expert is then allowed to provide us with investment opportunities, which we then evaluate in the next step, but we will get to that afterwards. Now, who is responsible for the partners at Splint Invest? So that would be myself as head of investments. I have like 13 years of experience in auditing investment managers, funds, fund managers, and I'm constantly basically as well on the move. So I'm a lot in contact with the expert, being it for the sourcing, but as well on-site visits, including as well the visits of the storage facilities. So storage is as well a very important aspect when it comes to physical luxury goods. We will get to that then as well afterwards. And here on the slide, you can as well see a picture of me standing in the warehouse of Braeburn Whiskey. So the bonded warehouse of Cayley casks in Roughs. So it's in Scotland, close to the Macallan distillery, or at least you have a very nice look from the warehouse to the distillery. And what do we do in such a warehouse? Whenever we visit them, we as well do audits on the casks, so we know which casks we own. They're all registered with the government as well, so it's supervised. And we basically as well go into the warehouse and want to see our casks, so really reconcile the casks which we have on our list with the stock which is visible in the warehouse. Now, who selects the assets? So this is a collaboration. It's obviously the expert who does have the expertise to source the right piece, and our partners, they've like with their expertise basically suggest us assets which could be interesting for our customers, and they do that based on criteria which we provide them. So we tell them about the sales volume which we want to target for a specific category, and as well the investment horizon which would be interesting for our customers, and many more factors. And based on that, they kind of select the most suitable investment opportunity. and offer that to us. And then based on that, we again do an audit on the suggested investment opportunities. So first of all, we want to know if the valuation or the price we pay, if this is a fair market price. And this we do based on independent market data, which is as well available to us. And then the supplier or the partner as well kind of provides a development potential of the product, which usually is based as well on the historical performance. And here we as well have our own forecasting models in order to challenge that and see if this is realistic. Another very important aspect is to see that the asset really exists. So we want to see as well the provenance of the goods, and very important, the correct storage and insurance. So without a proper storage, the asset will not further develop in value, or it might even harm the value if an asset is not properly stored. Thinking about art, there needs to be a certain humidity in the storage facility in order to guarantee that the art piece kind of still keeps its good shape or its quality. And that's something of utmost importance to really have a storage facility specialized in art. And the same applies basically as well for wine, whiskey bottles, and many other luxury goods. Now, how does the valuation process look like at Splint Invest? The investments which we have on our platform, they go through a monthly revaluation process, and we do the revaluation always based on current market data which is available to us. And the valuation models, they differ slightly depending on the asset category, or more precisely depending on the liquidity of the different assets of a particular investment category. So let's look at watches. Watches is something where there is a huge secondary market out. And here we usually use the price sources from watch charts. So that means this is a database which combines all the global data points of secondary market watch sales. And we can easily identify what the value of a certain reference number is based on the current condition, and if box and paper is available, and in which region the watch is traded. We can easily get out the latest market prices. Then for wine bottles, they're as well quite liquid, and they're traded as well basically daily, or at least a couple of times a week on Livex. Of course, there's as well, if you go for bigger bottles like 5-liter bottles, then the trading is not as frequent probably. But still, like for regular bottles, the trading is quite frequently, and therefore we can as well take the latest traded price of a specific bottle on Livex. So it's always kind of the manufacturer, the bottle, and the vintage, which are crucial in order to determine the market price here. Now for whiskey and rum bottles, the procedure is slightly different, and the same goes as well for art. So here we are in a situation that a certain good is quite limited. So if we take, for example, a bottle of the 6 Pillar collection, so of the 62-year-old bottle, there are like 400 bottles available worldwide. And so those 400 bottles, they're not traded on a daily basis. So they are traded probably 5 times a year on bigger auctions. And this is why the price as such, if we go and look it up on the market, then it basically stays quite stable, until there is the next price of an auction. And so until that point is reached, we basically use index prices in order to guide the direction of the market and factor that into the current market price, which you see within our app. So that means there is, like for whiskey bottles, there is the Rare Whiskey 101, so the Apex 1000 index, which combines 1000 collectible whiskey bottles, or the prices of 1000 collectible whiskey bottles. And we use that in order to factor it into the pricing of our whiskey bottles. And for art, it's basically the same. So the individual painting might be quite limited or even unique. It depends a bit on if it's a painting or a print. However, the artist as such has like more paintings on the market, so more different paintings, and therefore there is always like an index as well for the artists where we can observe prices and auction prices and development of them. This is what we factor in here as well. For whiskey casks, a pretty similar model is applied as well. So we are weighting the historical return of comparable casks and the development of the Braeburn Whiskey Index, for which the data is available to us. And we always adjust that and as well based on the current inflation scenarios. Now, where are the assets stored? So as already mentioned before briefly, the storage of the asset is tremendously important for the performance of the asset as such. So this is why we really put the highest focus on ensuring the best quality requirements are met when it comes to the storage. So we really push the partners on that. At the same time, we as well push on the costs. So we don't want to get the best quality at highest cost. We want to get the best quality at the best cost in order to minimize the expenses for our customers, or in other words, to maximize the returns of our clients. Now, where do we actually store the assets? I've already spoiled where we store our whiskey casks. So it's at Cayley Casks, the bonded warehouse in Roughs in Moray. Then watches and handbags are quite easily to store. Here we have a safe deposit at the Berner Cantonal Bank in Bern. Then the art pieces, which we source from the Maddox Gallery, they are at Hadley's in London. So they're really specialized in paintings and print storages. And when it comes to wine and rum bottles, the Nordic Freeport in Aalborg and London City Bond are the two preferred storage facilities which we use there. Since 2 months, we are as well having the first bottles in the bonded warehouse in Geneva at the airport. Now, are the assets insured? Yes, all our assets, they are insured, and they are insured at market value. So in the event of a claim, the Splint Invest, we would represent the co-owners towards the insurance company. And this does not really result in any additional time expenses from your side. But yeah, of course, like the future value development, this is not something which can be paid out. So it's really only like kind of the current market value, which would then be paid back to the co-owners of the asset. Now, how does the process of selling the asset work? So within the app, you see always our defined investment horizon. And this is kind of determined always together with our partners, with the experts, and together with the investment horizon. So let's say it's like 5 to 7 years for a specific watch. We define as well 3 scenarios regarding the performance of the asset. So namely, this is a defensive scenario, which is like quite conservative, where we, for example, take the inflation rate. So we at least expect the asset to move up the same value as the inflation rate is at the moment. Then we have a balanced scenario, which is kind of a baseline, so a bit based on historical factors, which we see on the market as well for a particular product. And we have as well the ambitious scenario, which is kind of the best case scenario. So let's say we take the best year or the best 3 years of a specific asset, and we expect the asset to continue this performance level as well in the future. Now, before we reach the planned investment horizon, so meaning before we enter year 5, we are passive. That means we don't get active on the market and try to sell a product. However, we as well are open to listening or to listen to offers that are in the ambitious scenario. So this is then the moment if someone would already pay us now a price in the ambitious scenario for a particular piece, which you can see that it is an emotional price, we would probably sell right now. If we would see that the asset will continue to grow, and this is just like the baseline right now, we might reconsider again. But otherwise, prior to the planned investment horizon, we basically stay passive when it comes to the sale. Then as soon as we are reaching year 5, this is the moment where we become active, and this always together with our partner. So we will try to sell the investment at the value between the balanced and the ambitious scenario. And after the planned investment horizon, so meaning after year 7, and we weren't able to sell it at between the balanced and the ambitious scenario, this is then the moment where we, of course, remain active, but would also then accept offers which are rather in the defensive scenario. Now, the Splint Invest as well offer webinars. So you're already listening to one. So this basically answers already the question, but we are offering not only the kind of the introduction webinar for our customers in order to familiarize yourself a bit more with Splint Invest, to answer as well important legal aspects behind. We as well offer webinars to showcase our investments and as well our asset categories and our experts. So, for example, we're hosting on a monthly basis the investment talk. We always release the assets at the last Thursday of the month. And on the Monday before that Thursday, we present the investment opportunities in the webinar talk at 6:30 p.m. Important here, you can subscribe all the time for the webinar. Whenever you're not able to attend, you get a link to the recording and can watch it on the go anytime, whatever suits you best from a timing perspective. We as well host the webinars together with our partners. You can find all our webinars under splint-invest.webinargeek.com. And especially with the partners, it's always quite interesting. You get in-depth market details around the very interesting and emotional assets which we are offering. Good. With that, I would like to hand back to Aurelio for the legal questions.
Thanks a lot, Mario. It was, as usual, very interesting to listen to your thoughts and explanations. Now, let's go ahead and talk a little bit about the legal aspects. I know sometimes they are not as exciting as talking about the assets, but I think they're very, very important as well in order to really understand what you are doing when acquiring, for example, a Splint. Now let's jump into the very first question, which is what do I acquire when I buy a so-called Splint? Now the term Splint is a made-up word we have created, and this is how we call the digital representation of the fractional ownership. And when you acquire a Splint of a specific asset, this represents the direct co-ownership of this specific asset, which means the concrete Rolex, the concrete red wine or champagne. So it's always a very concrete asset. The Splints, the tokens representing the co-ownership, are fungible but limited. So the number of Splints available or existing per asset are limited and cannot be adjusted. But they are fungible, which means that you don't know exactly which one, so which token you own, but you know that how many tokens you own, and you know exactly your fraction of the co-ownership. Now we can go ahead with the next question, which is what happens if not all Splints are sold on the platform? As you have seen in the app, or as you will see in the app, we pre-purchase all the assets before reselling the co-ownership from Splint Invest to you as an investor, of course, through our app. Now, assuming that an asset is sold at 80%, this simply means that we as a company, we still own 20% of the asset. And we actually don't care at all if an investment is not sold out. This just means that our exposure to that asset is higher. Of course, like on a long term, we are facing liquidity issues as a company if all the assets are not sold, of course. But if an asset is not fully sold at 100%, even at maturity, that's absolutely not an issue for you as an investor. Indeed, it can also be an advantage for us because it means that we are participating on the value development. Now, let's quickly talk about what is happening if Splint Invest goes bankrupt. I mean, of course, we are working hard to avoid this situation, but being prepared for unexpected scenarios is very important as an investor. That's why we developed a collaboration with a company called Xellence. This is a contractual collaboration which entitles Xellence to jump in and represent all the co-owners in case we go bankrupt. Why is this important? You are the co-owner as an investor of the asset, which means that even if we go bankrupt, you still own the asset. It's yours. So it's not part of our liquidation proceeds. However, it would be very difficult for you and the 999 other investors to coordinate when it comes to selling the asset if we are bankrupt. That's why Xellence jump in and takes over our role as co-owner representative in case we go bankrupt. As Mario already mentioned, very similar to the case where an asset is getting damaged, no additional cost occurs for you as a co-owner, Excellence is getting paid by the exit fee of 2%. So that's the same fee you would have paid to us in case we would have organized the selling process of the underlying asset. So no additional costs, no additional effort. The only disadvantage is we will no longer provide new investment opportunities, and there will be no marketplace within the app anymore. This means that you're forced to keep the asset till maturity. However, Excellence is trying to balance between selling everything at one point, which is definitely not the best idea because you are going to pay a liquidity premium, and trying to identify the best selling point in order to avoid an investment period of 10 years. So like to get your liquidity back as soon as possible without generating a negative impact on your investment. Now, I think that's one of the last questions, but as well, very, very important. How are splints treated from a tax purpose, from a tax perspective? So as you may know or expect, we cannot provide tax advice. However, what we can say is that we provide all the relevant documents you need from a tax perspective and to fill out your tax return for free within the app in a reasonable time frame in January. So our goal is to make it happen, is to provide you with all the documents needed already in the first week of January. This year, so in 2023, we managed to get everything in the app, I think, till the end of January. For next year, we hope that we can do it in the very first week. So even if you're doing your tax return very, very, very early in the year, you should have everything needed within the app. Now, in Switzerland, we can confirm that under Swiss law, splints, so the tokens, are treated exactly the same way as tangible asset. So you're going to declare this in exactly the same way as if you would own the whole watch, the whole painting, the whole car. It's seen as a part of your wealth, and you will pay wealth tax on it. However, in Switzerland, everything which is a profit on wealth is not relevant from an income tax perspective, but this is only relevant for Switzerland. And in any case, if you are in doubt, you should consult a tax expert. We are more than happy to put you in contact with experts in case needed. Now we are at the end of our webinar. I hope we were able to answer all your questions. In case you have more questions, one option is check the app. Often by using the app, most of your questions are getting answered. Additionally, within the app, we have an extended FAQ section with videos. So there, Mario and myself, we are explaining many, many additional things and answering many additional questions, even with videos. So check that out. And of course, if you didn't download the app now or till now, you can scan the code here. And if by entering the code alternative 10, you'll get a 10 euro starting balance to do your first investment. Also, if you like the app, if you like the webinar, we would highly appreciate a review either on Trustpilot or on any of the app stores. So thanks a lot for listening and have fun investing.
Thanks a lot. Bye.